The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, and the day before Thanksgiving, this 25th day of November. My pleasure to be here Monday through, well, we won't be here Friday, so Friday we're off, just a half day. TFNN is going to be closed, and so we'll see you back here on Monday. Have a great Thanksgiving, and let's look at the numbers. Dow's up 24 at 17,836. S&P is up 1 at 2090. The comp index is up 9 at 5,112. That's very interesting. Comp index is starting to move a little bit better. And you've got gold down $1.80. I'm going to talk about that in a moment at 1072. Silver is down just 3 cents at 14.12. Platinum down 50 cents at 841. Copper is down there at the 2005. I remember Andy Heck talking about $2. Boy, did he get that right. And crude oil is at 42.49, down 38 cents. Bonds are up about 9.30 seconds, and you've got the dollar. We'll talk about that. We'll go right there now. We've done most of what we need to do for the opening. And thank you to our great hosts. Wish all the hosts and the TFNN staff and all the participants and my wonderful engineers, Al and Steve. And just a happy Thanksgiving. And let's go straight to the E-mini, which is up 325 at 2,088. We're going to look at this and say that it's holding it's walking the 9-period exponential moving average, which is at 2077. So far, this is good action. What we'll be talking about over the weekend when my subscribers to my opening call got my charts that I started sending out early in the morning, Saturday. What I said was, look at the patterns. So far, it's very positive, even though there's bad news. And I'm expecting that there's some kind of a doji candle on Monday, small candle, a pullback Tuesday, and then by Wednesday, we'll start moving to higher ground, and that should follow through into Friday morning. Well, we had that all yesterday. In one day, we got that whole, actually from Monday to Tuesday, we got everything I was looking for. So this is now just a restive period. If you look at my indicators right here, this is the E-minis. It shows you the E-mini daily with the Chapman wave resistance and support lines. It says 2055 is support. Well, we went down to the 260, what was it, 265 level. It says that the 2108 level is very strong resistance in the daily. But look at the 120-minute chart. It shows you massive resistance at 2091 to 2092. So a break into the 2093s would be really positive. And it just says that there's support at the 2086 to 20. Yep, look at these 2086s on the 10-minute, and the 120-minute chart says 2090 to 2094 is the area of resistance. It doesn't show you any support, so that means they should be moving higher. So the bias for my subscribers is that we are long. What's really interesting is we went into an area that we haven't touched for a long time, and that is gold. I just, maybe we're way early, because let me show you the dollar right now. That's what I want to look at. Look at the dollar. The dollar screamed to a leg C, and then I said, wait a minute, I think I might be mistaken in my wave count, because I did circle the instant restart, Chapman wave instant restart. This has been a very difficult. This is one of the few times I can actually say that I had parallel counts, and each one was absolutely legitimate. And I'll just do it real quickly. I'll treat this as if it's Technical Friday. You got the H to a lowercase m pattern, and that went to peak A, B, C, and then C dropped very sharply. Then I decided, because of the pattern of the stochastic and the MACD, there could be a continuation pattern, but it would be best in all the charts if I treated it as a parallel wave count. So when we got to that peak right there on the 23rd of October at 97.20 in the dollar index, pulled back slightly for 2 days, and on the third day, whoosh, went right up to 97.82. I circled it and said that's an E/A. Why is it an E? Because it continued the C to a D to an E in a very smooth move to the upside. At the same time, the way it came down, essentially everything, all the charts really looked like they started the brand new move on October the 15th. So because of it, I had a parallel wave count. That meant that the next level was E/C, and then a D, and that D, F/D, and then a G/C. And then that got real complicated. So I try to make it as simple as possible. I called that down move from that peak E right there on the 10th of November. I gave it a down arrow. And then I gave it an up arrow and I called it the Chapman wave leg body. This is the stork leg formation. Then I was looking at this yesterday into last night, and then early this morning I said, you know what? I'm going to treat that instant restart as brand new A, B, C, D, absolutely perfect. There's nothing wrong with that. And it's even better because it goes to a D, E, F. And in this particular formation, it very often goes to an F or a G, and then it pulls back. And that would coincide with the stork leg formation. So my anticipation here on the dollar is that even though we are so close, I think we could just spike one more move higher. Could take a few days to do it. And that would take the weekly to 100.40 or higher. At that point, what we've got is that the dollar monthly index starts leg C. Boy, my eyes are glazing over. I don't know about you, but this is getting a little complicated. I'm going to make it as simple as possible in words. 101.40 starts leg C in the monthly. It extends leg C. I'm not going to call it F/C. I'm calling it C. I believe this is a brand new move. There's a buy mode in the weekly chart, and that suggests two things. It suggests very often what happens is you get a slightly higher high in the cup formation. You stop just before, right on or just above. You might or might not close above, but if you start to break down and go underneath that previous level of that high of 139, you could in fact start to see a pullback, and it takes a little bit of time and a little bit of price, but mostly time. And that consolidation can take a few weeks. And it can take the dollar down from 101.40 something back down to 97.45 or 97. And that would correspond to a leg C. And within 1 month, we might get that whole consolidation and start a continuation of leg C in the monthly in January. But it doesn't matter. We're going step by step. But my real issue here is that this dollar move on the 120-minute chart, if I can just find it right there, tucked away, hiding away, right there, has an extension to the upside that is saying to me, let me show it to you, is saying to me over here that expanding cone formation often pulls back and comes back to the trend line. And that would correspond a lot with what we're looking at. So I'm totally wrong if by Wednesday next week, Wednesday, Thursday of next week, the dollar's trading at 102.70 to 103.10. That's just not going to happen. That's an exciting move for the dollar, because it says it's broken out and it's an extended move only in C in the weekly chart. Okay, so let me get this out of the way. Now let me just show you something else. In the gold. And you know, I've been a bear. I'm still a bear on gold, even though technically we are looking for a bounce. Gold is saying to me that the downside might be limited. 1062, it's at 1071 right now, down to 1062 support. I'm still targeting the 1028 area. It doesn't have to be exactly of the 200-period exponential moving average, because it's getting closer and closer as my target in gold, which means that that's when the dollar extends even higher. It's just the shorter term that says to me, there's a chance. Let me get this back in again. There's a chance that this gold contract with a high of 1080.70 just yesterday, pulling back, holding the low, if by Sunday night, early Monday morning, no, of course, Friday, overseas, Thursday and Friday, you got activity overseas. If when we basically get back Sunday night, Monday morning, if gold, in fact, has moved a little higher and has gone above the 1080, 1081, 1082 level, that would be very positive. And as I'm looking at it, I'm suggesting that this particular pattern that we have right now, right, let me make another arch formation right there and right there. That is saying to me that you've got the lowercase m that goes to a lowercase h right there with slightly rising lows. That always sounds a little weird, doesn't it? But they are rising. Look, there it is. We're kind of on the cusp in the very short term. So we'll see what happens. And the only reason why I think that's possible is that the dollar, let me just go back to let me just do the EUR USD right now, because that moved even lower again today. But look what's happening. See this 9-period exponential moving average? This the black line right here. Let me move this away. This is the monthly, very ugly monthly chart. This is saying that it's just getting to a point where if there is, at 1.060, if there is a bounce and it can hold not above the high of the 19th of 1.076, but can actually move to 10829, start to break that high right there, you're looking at the potential for a 10-day to 14 trading session rally to the upside. And then you might even see 1.08 if the dollar starts to pull back. A lot of ifs. I just wanted to paint the scenario. I haven't done that for a long time based on the dollar, because I've been looking at the dollar as being the modicum of strength right here. So that's the story. Now, one other thing that I want to look at is in the, let me just do this. I want to do the relationship of the general stock market. Let me just go to the Dow right now. INDU. See, the Dow at this particular point has accomplished a huge amount. It's gone from 50,370, that was the low back in August the 24th, and it's gone to a peak, B in the weekly, all the way to 17,977. It had a monster move 3 weeks ago when it came down. I shouldn't say that. It wasn't a monster move. It was a very sharp decline. It was a surprise decline in the sense that it pulled back so sharply, it went right under the 9-period moving average and looked really ugly on the Friday. Monday, turn around, and we turn around, we go a slightly lower low, and then whoosh to the upside. And that recovery that we saw last week has been really good. Look at the tiny little candle we've got here. And it is a slow week, being Thanksgiving. But I'll talk a little bit more about it, because I want to give you a relationship of the Qs, the IWM, the New York Stock Exchange, and the Dow and the S&P when we get back. And bonds, yep, I'll get to bonds. Be right back. Basil Chapman, Tiger Conditions Hour, Dow's up 21.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I was just quickly scanning because I had a question about some of the global stocks, global indexes. Well, you know what? We'll get to that in a moment. Let me just do a couple of things right now. Let me just show you. The IWM is having a nice day. It's up 0.45. Remember yesterday I was speaking about this and I said maybe the Russell 2000 small cap stocks might rally a little bit better here because they often play catch up at the end of the year into early January. I had a couple of questions. I'm going to deal with them in a moment. Just one quick thing. So the IWM is acting very well. The SPY, let me go to the SPY. The SPY is only up 0.07 and it's working hard. It needs to, there's a triangle pattern that it needs to break out of here. There's the triangle, and it definitely needs to break into the 210s. It's at 209.47. So I wanted to just quickly show you that there's a relationship here that is slightly different. Remember yesterday I spoke about old economy, new economy, and that the NASDAQ really was pretty much the New York Stock Exchange was the old economy, and the NASDAQ was the new economy, and that's why the NASDAQ had done a lot better. But now we're looking at something a little bit different, and we're going to see what happens over the next week. So 3 questions. One is, would I look at the 2-year futures? For some reason, I'm not getting the 2-year Z15. I'm just not getting it. So I'm going to ask if anyone has TradeStation, you know what the symbol is for the 2-year note. I'd appreciate it. And then I can answer the question. Another question is S&P, December 16th, FOMC meeting. Big sell-off coming? Do the charts show this? Let me show you something that I'm looking at here. So I'll answer that just real quickly. I'll go to the spine. I'll say, look, the MACD is at 84%. The MACD is strong. The stochastic's at 84% in the weekly. The daily is only hasn't even got to 80% yet. So it'll only get there if the S&P goes up to 2112 to 2113. I suspect that's when you'll see it. So I can only answer the question at the end of the weekend. I want to see exactly how we close because it's a great question. I've been thinking about this all the time. That's why I'm looking at the dollar so closely. I'm looking at the small cap gold stocks. They fabulous. I mean, one we've got is up 1.39 just today percent. That's big on a day like this. That's not the end of the day. That's right now. But I'm just saying that I'm seeing signs here that there's something a little different. How it impacts the market is going to be very important. Let's go to George in New York. George, how are you?
Basil, good morning. How are you today?
I'm good. Good morning to you. I'm very well, and certainly happy Thanksgiving to you and the family.
Yes, to you as well, Basil, and to your family. And, of course, thanks for all your help that you always help me.
My pleasure. So you'd like to look at...
I'd like to revisit Vitamin Shop.
Okay, good. All right. So your story on Vitamin Shop is what?
Okay, I called you months ago about Vitamin Shop, but I never really did anything. I sold some puts, but unfortunately I had to buy them back because the trade didn't seem to be working. And now, all of a sudden, I see on my weekly chart, using a 30-week EMA and a 65 EMA, I see a reversal as of last week.
So, okay, give me a second. I've just finished. I've just done the monthly, and it broke the 200-period exponential moving average after making a peak F top at over 65. Way back in 2013, February, I think it was, and now it's just holding above it. So the monthly chart with a couple of days to go is so far improving, but it's not great. Now the weekly chart, nice candle from last week, nice reversal candle is the kind of candle that Steve Rhodes will probably spend a lot of time talking about. It's got a lot of characteristics that are very important. I just want to do this real quickly. I'll do this A, B, C. That's a D. And then we'll start E. Then it goes A, B, C, D, E, F, G. All right, so I'm saying that we're at a G at the bottom. This is since we've got a half a day to go and another half a day on Friday, my suspicion is we will not go down back into the weekly low of 26.57. So this I'm going to call new leg A, a gray A, because it's just the beginning of a move. But the stochastic has been moving up for a while. It's a nice divergence between the stochastic moving high and the price coming down. And the MACD finally has started to move higher. Now, the work that I'm doing in terms of looking at the sharp gap up and then break down, and then this turnaround with a Roman candle back on the mid-November. This is so far very good. Okay, the break allows me just to take a few minutes. I'd like to do a little bit more notation on it because then I want to hear your fundamentals on it, because there is another story out about the Vitamin Shop, I believe, and we'll get to that. We're on with George in New York, Basil Chapman, Tiger Technicians Hour. Dow's up 16. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with George in New York, and we're looking at VSI, which is a Vitamin Shop Inc. I remember this is the one I believe, I'm pretty sure it was the Vitamin Shop, that I was looking at the chart. We were in Newport, Rhode Island, and my wife and I were walking around. We went to this little antique shop, and we were looking around. You know, guys have to find a chair to sit down while, you know, at least that's my case. And then my wife was looking around, and I've got my cell phone out. And I remember looking, and this popped up. And I can't remember why, because I think I was looking at it at that particular, I just looked at it previously, and it came out as news. So this goes back, way back, when it was still in the uptrend, and it just remained with me. But we have never ever had Vitamin Shop, I think, on the list of stocks to own or anything like that. And look at this, the daily chart. You see it better in the daily than the weekly. Look at the down channel. It's unbelievable how charts manage to make lower highs and lower lows, like the 28-year or whatever it is bull market in bonds, when bonds have gone in a beautiful channel, a perfect channel for so many years. How does the chart know to be in the channel? Well, I don't know. I've got a theory about it. We'll talk about that some other time. But look at this. This is the first time that a Vitamin Shop has gone to the low and so quickly with the technicals improving. Did it before, but it failed when it gapped up. Now the technicals improving. So now, George, I can look at this and say, do you have a fundamental reason for looking at this on the long side?
Yes, from a fundamental reason, when it hit the low of 26.57, my margin of safety was $24 on the stock. Now, what is a margin of safety? Margin of safety is when you see something in a store and it goes on sale and it's 50, 80% off, and then you say, I'm going to buy it. Well, that's what margin of safety is. Then what I wanted to do from a technical point of view, which, thanks be to God, I follow yourselves and everybody else on TFNN, I was looking for a sign of strength. And then I see now this key reversal comes in last week, what I call.
Okay.
And that's why I decided to call, because I'm thinking to go long on it, because I still have a price target of about $48 going out.
Really?
Now, have that. Why I have that? If you look at their 2015 earnings, they're going to be 205. So just comparing it to a bond, we're talking about a stock that should be roughly about $46.
Okay, yep, okay.
So if we go out to next year, the earnings are slated to be 240. Now, we're at a risk. On November 17th, 2015 of this year, just passing, the DOJ and other agencies are starting to attack GNC, Vitamin Shop, Herbalife.
Right.
And they have to do with certain products. But these certain products were falsely marketed as dietary supplements from third-party manufacturers. Now,
right.
Vitamin Shop has been on top of things, as well as GNC. So we'll see where this goes. It's just like when Monster Beverage had the problem with the caffeinated drink. So it's a comparison like that. So with that, the stock tumbled, of course, and Vitamin Shop did lower guidance because they acquired a vitamin manufacturer last year, so they're having trouble integrating it. But it's a slow process, and it seems to be working because they just had earnings, and the earnings were up over last year. So with that said, we see now the company starting to heal its way. You know?
So,
now, yes, go ahead.
I was just going to ask you. So the earnings back in February of 2013, when it made its high, what was the comparison to the earnings then and to what your projection is now?
2013.
Yeah. Do you remember offhand?
Well, I know for the 2013 year, the earnings were 218.
Okay.
And that's why now watch what happens from 2013 to 2015. The earnings had dropped. 2014 was $2, and now 2015 they're starting to recover, and they're estimated for 205. So here's the point: they made the acquisition on the manufacturer. The earnings are starting to tumble a little bit. From 218, they go down to $2.
Right.
And from a fundamental point of view, also, they did reach their intrinsic value of that $65 mark. They were actually overvalued. And that's why portfolio managers started to take off the top. And that's why you, as the technical analyst, then you start to see a change in the chart. Because what happens, that's when fundamentals and technical analysis fuse. And by doing so, we see it's overvalued. You see it breaking down on the chart. And that's
correct. Right. That's why I do like to put fundamental, when I can get a grip on fundamentals with the technicals, because eventually they do come together. That's most important. So let me do this, George, because I got a bunch of questions and I got some things. So I want you to do this. I like what you're talking about because it kind of fits with the chart. But until VSI, Vitamin Shop, SHOPPE, big discussion in the den. That's old English, shopper. And what we're looking at is if it can get into at any point in the next, I give it time, doesn't make any difference, in the next 2-3 weeks, if it can start to trade in the 29, no, it has to go higher. If it can start to trade in the 33 area, now 33 is 10% higher, but the way it's moving right now, there's just a chance that if it's able to break this trend line, let's say 31.50, which is not a big deal, 60 cents higher. If it's able to even trade there, it doesn't have to close. If it even trade there, it's starting to show signs that it wants to move high. That's going to improve the technicals on the weekly chart. The moment the MACD starts to cross positive, you see, we had a volume spike to the downside. I usually like to do this based on the daily chart. Oh, I did. I got it right here. So I've got what I call a Chapman wave price volume reversal. So that says that after going down for a long time, there was a climactic sharp move down that was met with intense selling. That's the only way I can think of it, because normally it's not the buying, it's the selling that turns the stock around. Then what I look at is the moment it breaks above, especially with this Chapman wave Roman candle that we're looking at, when it starts to close above, that to me is a very important sign. So this says that this stock should not go back towards the 26.57 level for at least 28 sessions. It doesn't say how high. You need other technical analysis. But what it says is you've got yourself a 2.5 to 11% risk if you got it right now at this high at 30.95, because it should not, within 28 days, it should not go down to, it shouldn't actually even go down to the 26s. 27s would be a really, 28.50 should be a very strong base. So I like what you're talking about. So how about this? Let's look at this again in about, let's give it a week. Let's give it the end of the first week of December, or any time in the first week of December. No, I prefer the first week. I'm sorry, what?
Okay. Yes, I agree with you, because normally what I like to do also, because I don't want to put good money into bad, I like to stalk what I call the stock. So,
good.
Yes, I agree. I think we should follow it and see if we see any signs of strength, and which, of course, I defer to you on that.
So the other thing is that I also look at, because I do like it very much, and the 120-minute chart is in a leg E right now, up against 200 period moving average resistance. What I do like to do in a situation like this is I would nibble on this. You know, I mean, I really mean nibble. 10 shares. I'm talking about just why? Because every time you're looking at it, you're in the stock and you got it on your board. So you're looking at what happens when the market does X. Does this do the opposite, or does it follow the market? You want to know the relationship that it has both to the market and to itself. So that's the best way to do it. So I hope that helps you. I like your thinking, and I think I'm putting it on my list as a watch stock. I appreciate it very much. All in the den, everyone says there. I like George's thinking. So, George, we appreciate it.
Happy Thanksgiving to everybody at TFNN. And to all the listeners as well. And thanks to everybody.
Thank you, George. Same to you and your family. Have a great one. So let's talk again in about 10 days or so. Let's watch this closely. Thank you very much. So, folks, that was VSI, and George must have an influence because it's actually moved a little bit as we're talking. Now, let me go to the questions that I had. Real quick, AXP, I'm going to do that. AXP, you know, AXP, I wouldn't be touching American Express. I think Visa's the one that's acted so well. Look how Visa's acting. This is a better stock. I realize AXP, Visa at 79, AXP is a little bit lower at 71, and you're trying to get something from a low that has a potential to go much higher. Oh, I don't know if you're looking at it as a short, but as a short, I still wouldn't touch it. I'd wait for a bounce before I'd consider it. Actually, as a short, it's probably a short, but I wouldn't be looking at it. I'd rather be looking at Visa as a potential stock that is in a leading category. The stocks that are leading the market tend to stay in that position as long as the market is moving higher. To me, that's a better relationship. So that's that one. Next question is, if I can just scan down, EWZ. A lot of people were asking about the foreign stocks. This is a foreign stock, but it's different. This is the Brazil EWZ. This is Brazil capped ETF. You know, I've looked at this because I've scanned my I don't know why I've done the EWs, every one of the EWs. I don't know how many times. I don't seem to have it on this chart. All right, the letters are gone, but in the meantime, I'm not interested. I don't particularly like EWZ right now. If you're looking at EWM, that was a question in the den. EM has the same kind of chart pattern. I just don't see it. I know Goldman Sachs has mentioned that that there's a good chance that this is the emerging markets could do quite well. I want to see that. I'd rather be in an IWM. I'd rather play the laggards here. And so that's that question. There was another one as well. Oh, TSL. So TSL, this is very interesting. This is Trina Solar Industries Limited. And it had a spectacular move. It went from a low of 2.04 way back in November of 2012. It went peak. Look at this Chapman wave. What does it require you to do? It requires you to see the stock go peak A, peak B. Moment you pass a B very strongly, you can say buy signal to buy mode. I want a peak D. And what does it do? It goes right to a peak D in the 18s. Turns around, comes back down below the 200-period moving average, below the 9-period moving average. And then what does it do? It tries to form some kind of a base and keeps failing, makes the H and then fails. So, if you're looking at a quick trade with a potential to move a little higher, I don't know. This is a tough one. As a trade, if you're in it, let's see, Dan, okay. I'm looking at, TSL is a possible short through put options. I'm looking at an entry at around 11. If it fails on price and volume at that point, I would look to get out of this month's low of 880. What do you think about this short-term trade idea, Dan? Dan, I think you have the right idea, but when you said, what, at 11? Did you say 11? Oh, yeah, absolutely. I wouldn't go to 11. I go between, even if I don't know if it's going to even get there, but between 10.20 and 10.40 is going to be absolutely critical for the stock, because if it starts to make an H pattern at TSL trading at 9.59 up 16 cents, if it starts to make that H pattern, that arch formation, I think you're absolutely right. But right now, keep your eye on it. Don't do anything. Let's look at it again, maybe Tuesday. Give it Tuesday or Wednesday of next week. Give it a couple of days. Let's see what happens. It is acting well the last 2 days, but I agree. The downtrend, I think, I think it's the best case is an H to an M pattern in the weekly as well. I think it'll fail. I don't think it's going to go higher than 1040s, the 200-period exponential moving average. Okay, so let's hold off on that one. Now, I had another question. Emerging markets will bounce as the dollar pulls back. Yeah, I think so. I think that's the relationship. Well, that's a potential relationship. We won't know until we see if it works out. Now, let's just go back to the dollar for a minute. This pattern that I'm looking at, this cup formation. Remember, I drew it a long time ago. I said inverted cup formation. This is the inverted Y, or the reverse Y. That's what it is. Inverted would be the H pattern. And that is a formidable pattern because it takes you to the chapter in my CD introducing the Chapman wave methodology. And that is the drop bucket formation, the double top formation. And that's chapter 22, slide 366. And we'll discuss that in a moment, because at 93 in the stochastic, I cannot rule out that there could be a breakout with a Chapman wave cup and ladle breakout. I'll talk about that when I get back, but I better write it down, because by the time we get back, I could have done 10 different things, and my mind would have moved on. I'll be back. Basil Chapman, Dow's up 6. We'll be right back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. We're back. And so here's my CD, Introducing the Chapman Wave Methodology by Basil Chapman, Chart Analysis in the Stock Market, only available at TFNN. And so we're looking at all these different patterns. I got how many, 27 chapters or something like that. And the chapter that we're looking at here would be the chapter 22, right here. That's the one we talk about very often. I still call it the drop bucket pattern because it reminds you of a backhoe that picks up all the gravel and then just dumps it. This is I always wave my hands and I hit something. The drop bucket, also called the double top formation. So this is what it looks like right here. Let me just do this, down, down, down. So that makes the top, look, makes the top, retest the top. It can go just towards, just on, or just above, and then it breaks down. If it takes out 1/3, certainly 1/2 of the move from the left side lip to the bottom, it's going to test the low. And then you can go 1-to-1 to the downside and just keep measuring like that. So what does it look like? Well, let me show you. This is the drop bucket pattern, the double top pattern. Let's call it the double top. To coincide, so that's what did I say it was? A reversed Y pattern. So that's the Y right there. But to go with it, you've got chapter 17. Chapter 17, the dreaded H. And what is the H? Well, the H is exactly the same thing, but upside down. Look, there's your H pattern. Down, rallies, fails, takes out the left side low. Down, fails, takes out the left side. Then eventually you can even make a really big one. And that can turn into the pattern that I call the M pattern, lowercase m, lowercase h to lowercase m. So let's get rid of that. This is the H, junk. This was just asked me by Bob. Bob wants you to know, is this a dreaded H? Absolutely. Have we taken junk, which is the Spider Barclays high yield bond ETF, taken out the low, 35.10. This week so far, we've gone to 35.11. We've got 2 points before taking it out. So far, it's successful. Now, let's go back to the chart we were looking at. We were looking at the very big weekly chart, H pattern. This is the opposite. Remember, this is, which one is this? This is the double top or the drop bucket. Chapter 22 in my CD. Chapter 18 is the H pattern, lowercase h. Here we are. So there are a bunch of patterns. Yes, the Chapman wave, stalk leg formation, a whole bunch. Look, the dollar's starting to pull back. What's gold doing? The GLD right now is down 34. It's come back a bit at 102.61. Is this the low? No, I'm just saying this is a chance that we got to look at this real closely. So, in this particular pattern, if the dollar powers right through next week, goes right through the high of this week, 99, right, it's 117 with 2 days to go because overseas they trade as well. If it powers right through, the Chapman wave cup and ladle says you can go to a D. And then you've got to be careful because you're going to come back and test the lip. But it's a great move. It's a power. Look at that. If it powers right through, that means you're still going to a D. So that's the reason why I've been talking about the dollar. Very interesting moment that we've got right now. A little bit of tiredness that I'm seeing in the upside. Starting to make highs, but they're not much higher than the previous high. We'll see, because the MACD is just flattening out. Stochastic still good at 86%. Now, before we get going here, and I must talk about this pattern right here. This is the 10-minute chart. It had made a V-shaped pattern. It went right back, almost tested and failed. I just think that this is the day that we had all the move yesterday. This is just consolidating. Makes Friday, when nobody's home, this is where the chef is steering the boat because the captain is in the Hamptons type thing. You know what I'm saying? So that the general rule is for all the skivvies that are out there watching the portfolios of their fund managers who are off for the long weekend. The rule is don't do anything that the S&P is not doing. So if the S&P starts to rally, they're going to have to buy. As soon as it stops, they're going to have to say, oh, nothing. So Friday is going to be interesting because I want to see if there's follow through to take out S&P 2092.50. That'll be quite important. That should take us in the general market higher. So quiet day, but look for some sudden moves to the upside. Have a fantastic weekend. Be back on Monday. Check out my opening call. I think you'll find it very interesting.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.